So the Dow hit a record high at the open of trade on Wednesday ahead of that FOMC announcement. But what about the future? Well, joining us now is Jeremy Wagner from DailyFX, a technical analyst, and he's been looking in detail at the chart. Thanks very much for coming in. I mean, we've seen an 8% upside on the year so far. We're record highs. How much further has it got to go?
I do think that the Dow Jones is going to be running out of real estate in the near term. One of the patterns that I'm following right now is that we may be getting a fake out to the upside before a sell-off that may begin here in the next few days.
And what's telling you that we're going to see this fake out, and how is that really shown?
Well, so on this chart here, the move off of the lows in middle of April is currently in a three-wave move. And so from an Elliott wave perspective, that suggests that it could be a corrective type of move. And as a result, we would be looking for the whole pattern to likely be completely retraced in the near future. That would take it down into the low 20,000s.
Which is shown by the red line you can see at the bottom here, this channel that we're creating. When we're talking about Elliott waves, for those who don't really understand Elliott wave, it's quite a difficult one to explain, but can you simplify how to use it in technical analysis?
So in a very simple terms, 5 waves define the direction of the trend. 3 waves are defined as counter trend. So if we ever see a 5-wave move, we can assert that the trend is to the upside. So even when you look to the left side of the chart, the March high is labeled as a wave 3, and that we are in the midst of a wave 4 type of a correction. And so we'll sell off a little bit, but I think support will eventually emerge, and that we may get a retest of the highs in the future later this year.
When you say later this year, I was going to say, what sort of time scale are we looking at for these movements, the retracement back and then back up to the highs?
So the current retracement to the top side, it could go up as high as about 21,500 and still be within the bounds of the pattern of being a fake out to the upside. So at the current price level, I could look for this to turn lower in the near future. And then sometime later this year, probably within a couple of weeks to a couple of months, we find that bottom and then start to head back up towards the new highs.
And when we're looking at new highs, obviously the red line's really showing the channel here that's been created by the wave so far. I've heard other technical analysts talking about hitting up 22,900 by the end of the year. So going even further, I mean, do you think that's a credible, a realistic target to be looking at?
I would say that's a credible target later in the year, but likely going to see a dip down to the low 20,000s before we see a move up into the 22,000s.
So in terms of tradable opportunities here, we need to see a full retracement back before you feel there are any opportunities to be getting into this market.
That's exactly correct. That the near-term move is going to be towards the downside. Maybe we get a fake out lower that clears out the red channel, takes us down into 20,200, 20,000. And then at that point, the weak holders are shaken out, and then it will open the door for the long positions to come back in.
In terms of stop losses for this, I mean, in the markets, we're seeing it very important to make sure they're in place. Where would you be putting your stop?
So the stop loss, I would be holding it slightly above the 20,500 level. Because once we get above that mark, then the pattern becomes invalidated and something else is brewing.
I also noticed on this chart that you've got RSI. How important for you is it that you're looking at different indicators?
So in this case, RSI is also another indication that this is a tiring trend to the upside and that it might be a fake out to the upside. The high that we saw on RSI in March is higher than the current high we're seeing on RSI today. And price is at a higher level today than it was in March. And so that type of divergence is indicative of a tiring trend.
Okay, we do have to leave it there, but thank you very much, Jeremy Wagner there from DailyFX, on how he's using technical analysis and indeed the Elliott wave to forecast where the Dow Jones is going.